After years of extremes, our next guest says chances for a year-end rally are muted. Here with a few stock picks to carry you into the new year is Mark Lamkin, the CEO of Lamkin Wealth Management. Hi there, great to have you back on the show, Mark. All right, so it's been a year of volatility. Do you think we'll see more of the same in the new year, or will we return to basic economic fundamentals as drivers for market direction?
Well, thank you for having me, and happy holidays. And I do think 2011 was a year of extremes. It's about reverting back to the mean, or getting back to the middle. I think, just as President Obama spoke moments ago about getting to the middle of Democrats and Republicans, I think Europe gets to the middle. I think we get good consumer sentiment and confidence that continues to grow to meet good, solid economic data. That leads to 8 to 12% total returns for the U.S. equities next year. I'm very optimistic. Although we'll still stay volatile, it all gets back to U.S. fundamentals and less about Europe.
Mark, we had you on a couple of months ago. You like J&K. It's a high-yield bond ETF. You still like it moving forward into 2012?
I do. Since September 30th, that's up about 3%. We've got about a 7.5% dividend. But here's the nice thing about that. Moody's just came out with, said default rates in the high-yield sector is 1.8%. The market's saying about 8% default rate. That's overly pessimistic, so I think that we still got room to run here, and you get a great dividend yield while you wait. So I still like that heading into 2012.
What are your thoughts on the technology industry, especially coming off the big surprise from Oracle? Its biggest miss in like a decade or something. Surprised a lot of people and sent the NASDAQ down yesterday.
It is. You know, technology continues to be one of my favorite picks. We're selectively buying technology right now. But I have to tell you, today we've, investment committee, we've changed our mind a bit. We like the technology indexes right now. They're not commodity sensitive. Q3, businesses spent about 16% on technology. Q4 is about 15, 16%. That trend should hold through. I like the broad-based technology index, not just software, just not semiconductors. Broad-based technology picks right now, I think, is one of the sectors that outperform the S&P heading into 2012.
Mark, we got a few more seconds here. It seems like we've been in a range. I mean, equities have been trading in a range since October. Commodities have been trading in a range as well, most of them anyways. Do we stay in this range?
We do, until Europe breaks. It's Europe, 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 and I think what you're going to see into 2012, the first part, you're either going to see a quantitative easing package, an additional TARP package, or Germany blinks, we get a Eurobond. That happens, it gets back to U.S. fundamentals, and we have one heck of a rally heading into 2012. Unfortunately, all about Europe. We've got to get it cleaned up, and I think we will.
Thanks, Mark. Boy, everyone's talking about packages today.
Thanks, Mark. Appreciate it.
Mark and Adam before him at UPS.
Lori.